to do it in the court of appeal. So in the court of appeal, I don't know how to argue, because higher purchase access you must. So what I did was, I just stood up before the judges, I said, but they took money. That's all I can say, they really took money. Public bank did release money to them, but we don't have the document, so it's not fair. Sit down. Good point. Public policy. Hey, you take people's money, you return money. Okay? So, the whole idea of arguing public policy, sometimes, depending on the situation and the circumstances and the sentiment at that time, the judges tend to reflect public sentiment. Okay? So if money laundering is rampant and they feel the need to stop it, they'll actually just use public policy against you, but they need to be empowered somewhere. They cannot just say, oh, you can say, so they're empowered by 56.1. So they'll find a reason to say 56.1 is, and they won't tell you it conflicts. He will tell you, no, this doesn't apply. Why? Because there are other conflicting rights, which is the public's right. Okay? Now, risk management. Let me see how many more before we go to our lunch. Quite a bit more. Okay, I think some of it we can actually deal with it after we have our lunch. I think it is now about lunchtime. Okay, what time do you want to come back after lunch? You want to wait until 2 or you want to have it a bit earlier? Yeah, because you guys have something to do, right? Okay. Then we stick at 2 lah. We stick at 2, no problem. Okay, so let's look at risk management. Okay, risk management is one of the key points when we come to compliance. Why? As long as you keep the risk low, okay, things are safer. Okay, so how do you manage risk? Allocation of resources is being put based on risk. We don't put a lot of allocation of resources on things that we don't deem risky. Okay? Do you know there's a special category of customers and clients for businesses that has been having a relationship with a bank for more than 10 years? There's a special category. Okay? Now, if you're going to set up a fake company or a shell company to do business, you won't do it for 10 years. Okay, 10 years takes a lot of determination. Okay, you've got to build your books for 10 years. That means you're going to run a money laundering business by doing a legitimate business for 10 years and then only do money laundering business. It's actually quite difficult. So if I want to do money laundering business, I'll probably set it up for 1 or 2 years, maybe 3 years, and then I do money laundering. Okay, I'm not going to have a business that has got an existing clientele, a steady flow of income, and then constantly I have to report my taxes, subject myself to checks, and then I use that company to do money laundering. It doesn't make sense. Okay? So when it comes to risk management, we always assess the risk. After we assess the risk, we identify the risk, then we assess, then we control. After we control, we have to review the controls. So very important is when we put in controls, we need to know what are the control criteria. Okay, so how we put in the control criteria is a very important part of risk management. Risk management is science. Okay, it's not art. It's not like I feel if I put this provision here, it looks nice. No, it's actually science. Okay, so there's a proper way to do it, risk management. Okay, now different regulators deal with risk differently, but how does Bank Negara deals with it? By the way, Bank Negara is called a competent authority for AMLA. So if AMLA, anyone asks you who is the regulator for AMLA, who is the main body behind it that's going to change the policy principle, is Bank Negara Malaysia. Okay, they are the competent authority. So Bank Negara Malaysia adopts a RBA. RBA means risk-based approach. Every part of our compliance is based on risk. Okay, how we are going to reduce and mitigate risk and allocate our resources is by using this approach. Okay, so Malaysian risk management is by carrying out the following. How do we do risk-based approach? We need to risk profile. So we need to give a rating. So every one of our customer, be it individual or institution, has to have a risk rating. And after that, we have to do a risk assessment. Okay? So just because his risk is high, it doesn't necessarily mean that he is at fault. Okay? So we need to identify, assess, and understand the person that we are dealing with or the institution that we are dealing with. So when it comes to risk assessment, that's when we deal with KYC. Okay? Now, KYC, as the authority calls it, CDD, customer due diligence. Okay? So know your customers. Okay? Or CDD. So some people get confused, why KYC, why CDD. Okay? So this is KYC. And it becomes more complex these days because KYC used to be done face to face. Today, KYC can be done digitally. Now, if KYC can be done digitally, can there be a situation where I use deep fake to fool the KYC? Is it possible? Yeah. Today, the platforms are all able to detect deepfakes. Number one. Number two, today the platforms are all able to detect cut and paste. Today the platforms are all able to detect different figments or different resolution taken from different image files. So if I do a cut and paste, even if I normalize it, I use AI, the AML checkers are able to detect it. Okay? So remember, I'm not sure, our IC, does it have another image of ourselves? There's a picture and there's a smaller picture. So AML checkers are able to detect the bigger picture, the smaller pictures, okay? Key in the key identifier for your facial features, compare it with your liveness check. That's what you're capable of doing. So today, AML checkers, especially if they use digital platform, they're quite advanced. Okay? But no matter how advanced, there's always going to be a technology that slips through or is a little bit ahead. But then that is only a small percentage. So once that happens, it's discovered, you'll be rectified. So it's always a situation of playing catch up. No, it cannot be a situation where I cover all risks. I totally eliminate all risks. So it's always a situation of catching up. So there's going to be a small slippage for every AML platform. Okay? So here, know your clients. So these are the information that you need. Okay, you're going to go through screening. After you screen, you do profiling. After you do profiling, what happens if you decide, a bit too risky? What happens then? You can decide whether to take this customer or don't take this customer. If you decide to take the customer, you got to do an enhanced due diligence. Enhanced due diligence, you'll probably ask him for 1 year banking account. You ask him for self-declaration. You ask him for more documents that you deem fit depending on his activity or the service that he requires. Okay? So if he's a PEP, which is a politically exposed person, and he says, oh look, I've already stopped being involved in politics. Show me evidence. Okay? Show me evidence. So you've got to do things like that. Okay? Or he's probably a wife of a politician and says, I have since been divorced from him. Okay? Show me. So all this enhanced due diligence is going to be very dependent on the situation. It's not like your initial KYC, your initial CDD, where the documents are standard. So when it comes to EDD, it's slightly different. And who decides whether to onboard the client? Who decides? Policy of the company. In, let's say for instance, in a normal financial institution, risk department head. The guy is the compliance officer. The compliance officer decides. And if the compliance officer can't make up his mind, then he brings to the board. But the compliance officer gets to decide. But the compliance officer is answerable. Okay? So if I am a bank, unless you really give me so much money, the moment I find you to be highly risky, I want to save my resources. I don't want to open myself to being investigated, lose my license. I do not want to monitor you all the time because it takes resources, it takes time, it takes effort. I will just deny you and this stage. Oh, sorry, we are not ready for you. I don't answer you why, because it's my business. I decide how I want to run my business. I decide what is my risk level, what's my risk appetite. If my risk appetite is not good enough to handle someone like you, I don't take you. Okay? But sometimes the thing is, we don't always get to say no. So if we don't get to say no, then we're going to do the extra before we reject or we accept. But at least if we do the extra, we have a story to tell. So the whole thing with regulators is this. They don't come and say, look, someone slipped through your net. They will ask you, what have you done? If you have done everything, it could have slipped through, but there's no fault of yours. Okay? So the whole idea with regulators is this. We give you a framework, just apply our framework. If it slips through the framework, we don't expect you to be Superman. Okay? But if you don't apply our framework, that is the minimum. You've got to apply the minimum. Okay? So I stop here. I'll see you back at 2. Have a good lunch, and we'll finish the entire process later on. Hi, good afternoon. I hope everyone had a good lunch. I'll start with the second part of the session. Okay, so what we've done is we've done through risk management. Basically, risk management, if you want to know, there are some standards in risk management. There's this ISO 31000, and there's also this ISO 2050. I'll talk about this risk management a bit later. So the main idea behind risk management is through knowing your customers. Either knowing your customer as an individual or knowing your customer as a corporation. There are some basic requirements that you are supposed to fill in. So we always start with the most basic, knowing your clients through personally identifiable information. So we call that PII. So PII will generally consist of your name, your IC number, address, date of birth, nationality. So if they require to ask a little bit more, they'll probably ask, depending on the type of job that you are in, the type of services that you provide. You may also want to know their income level. You also want to know their occupation. Because there are certain type of, if you are of certain income level, you will engage in certain activity. And also because of your job, whether you are predisposed to a certain risk activity. So if you're not, then you will be considered low risk. If you are considered high risk, then there's a possibility they may not even accept you in your customer body. Okay? So this is the basic CDD process. Every time when there are certain actions that you do that seems to trigger certain flags, okay, and your action actually goes out from the ordinary things that you would have done. Okay, now let's look at what would be considered ordinary. If you're using an account, and in this account, every month on the first of every month, you receive an income of 5,000, and that's within the income bracket that you actually take and says, oh, I'm from this income bracket. So I know that this is the account that you use to receive the salary. Okay, and every time when I see, oh, there is this payment for your credit card. After that, I see there's this payment to escrow. There's this payment for your other services, okay, your DME services. I know these are actually very legitimate, very common expenses that you use. Okay, so these are what we classify as low risk. But sometimes I see you receive money. It can be your income receiving account, but I don't see any spending. For 1 month, there's no spending. For 2 months, there's no spending. Suddenly, there is a payment to a dubious person. Okay? I don't know why is this payment for. And this payment is to an account that has just been newly set up. Okay? So every time you get triggered is because people think that newly set up accounts do not have bad track record. So it says, as long as we transact or we deal with accounts that do not have bad track record, we won't have bad track record. Actually, that's not true. Accounts that are newly set up is also suspicious. Okay? So, whether your account is new or whether the account that you transact is new, that's also very important. Okay? So, let's say you and I, we often come across a situation where our friends actually ask, hey, can I borrow some money from you? 1,000, 2,000. Okay? That's alright. Right? Borrowing money to a person, friendly loan, that's pretty common. All of us would have done that one time or the other, actually as a borrower or a lender or a recipient. The thing about it is, if someone says, can I borrow money from you, but ask you to pay to a different account, you often have to say no. Okay? Why? You do not know the other person that you're transferring money to. Okay? And you do not have any record from you to tie down to that person. So if you're going to do that, you're actually putting yourself in a situation where you cannot answer. Okay? So if a person wants to borrow money from you and you are agreeable, you will probably have to do that to that person's account, not to a third party. Okay? So those are, every time, even though you're not in the wrong, you must always think, in the worst possible scenario, how do I explain to the authorities? Okay? So if you are the one that's going to do the questioning, you must also ask yourself, is the conduct of this party reasonable? Okay? So again, always ask yourself, what are the questions you ask this person? And what are the supporting documents that you ask from this particular person? Okay? So very often when we come to law enforcement agencies, especially when they ask you to have a sit down with them for an interview, and every time when they talk to you and you answer, and when you answer very convincingly, thinking that you have a full story to tell, okay? All they can do is just ask, can I have a look at your handphone? Whether are you prepared for that? Okay? Can I have a look at your handphone? Can I have a look at the person that made this request to you? Can I have a look at the WhatsApp? Then turn to the WhatsApp. Come, the messages are all deleted. Okay? So these are common tactics that we use to sniff out suspicious activity or things that you find a person couldn't give you a plausible answer. So plausible answers is very important. So these things like this will give me, as a law enforcement agency, reasonable grounds. Okay? So what is reasonable? It all depends on what they do to uncover. Sometimes they don't have to do much, they already form reasonable grounds. Okay? But reasonable grounds can always be challenged if it's not reasonable enough. Okay? What's reasonable? So we always say it's reasonable ground. Then what is reasonable? Jason, what do you think would be reasonable? What's that? Reasonable grounds is how you come to the suspicion they were involved in illicit activities. Okay? You always ask them for their story. And every story doesn't exist in isolation. Every story tends to have a follow-up. Okay? Or a build-up to that story. So every build-up will have a trail. So we always need a trail. So if we have a story that doesn't have a trail, you know that story is concocted. Okay? So those are the basic things that you got to look out for. And always ask yourself, if I am going to flag someone, if I'm going to submit SDR, I need to have adequate record keeping. Record keeping is very important. Okay? Why? Because if anything happens to his account, okay, he will say that, look, you shouldn't have made this because it's not even suspicious. Now my account has been frozen. You are a party that is complicit in the entire thing. Okay? But it's a little bit unlikely for them to come for a financial institution. Most of the time it's against the law enforcement agency. Anything that interferes with a person's right, okay, is actionable. So most of the time we go for judicial review. Okay? Why? Because it's a decision to interfere with your right to property. Okay? Now, what are PEPs? PEPs is another way where you're going to determine a person's risk level. Okay, so most of the time, every time when we have got our friends that ask us, hey, we are in a situation where we are PEPs. And as PEPs, we have a problem opening bank accounts. We have a problem getting financial services. Why? We are politically exposed person. We hold public office, and either that or we are related to someone that holds public office. But PEP has got different levels. You got low risk all the way up to high risk. Okay, low risk are officials of international, supranational organization, mayors, members of city. Okay, so as you go up the PEP, you find that they hold more and more power. Why does PEP rank out there as people with an increased risk? Because they hold a position of trust. Okay, they are in the position to take bribes. They are also in a position to exert certain amount of pressure. Okay, so what some financial institution will do, they rather not deal with PEPs. Okay, then I don't need to incur all these compliance costs, and I don't need all this headache. Okay, so all PEPs, they are different levels: level 1, level 2, level 3, level 4. So if you deal with head of state or government, okay, national or regional level, the judiciary, the law, the enforcement, then you have to deal with them. You got to be a little bit careful. Okay, these are high risk. Okay, even though if they come from law enforcement agencies, the very people that will freeze your assets, they are actually also in the PEPs. Okay, but the issue with these PEPs is sometimes they get flagged, but they don't deserve to be flagged. Okay, why? Because they got caught in your EML platforms. These are the people who hold position of power and authority perhaps 4 years ago, 3 years ago, of which they no longer command the same, amount of power. Okay, so they have relinquished. So in those situations, they will tell you, can you reconsider? Okay, please reassign a new risk profile to me. Okay, so in this situation, what you do is you ask for enhanced due diligence. Do the enhanced due diligence. For these people, what would you do is you can ask for self-declaration. Okay, you can actually ask for further supporting documents. You can even ask, you're going to do something like that in my bank. I want to know your existing bank. I want to see your records. He can choose not to give you. It's not compulsory for him to give you. But you can also choose to not accept his business. Okay? So, enhanced due diligence, the documents are not exhaustive. You can always ask the documents depending on what is the risk you try to countermeasure. So, those are the documents that you ask for. Okay? Financial report, relationship to certain people, self-declaration. Okay? So, if you say he's no longer in a position, when have you resigned? Okay? So who are the people you're still in contact with? Okay, so in that way, even if these people are high risk, you have ring-fenced yourself. Then it says, look, these are the basic compliance. I've furnished the necessary paperwork. Okay. Now, PEPs. Who are PEPs? If you look here, Minister of Finance, a very influential person, the brother to the Minister of Finance, the person that the brother is married to. Okay, and the brother, the mother, the sister, the children, those are actually PEPs. But you can actually rank them according to degree of influence. Of course, the person itself will rank higher compared to the rest. Okay? So, risk-based approach, yes.
So, let's say it's a friend, is that person considered PEP?
If it's a friend, most of the time, no. No. Only PEP is most of the time is that individual themselves or people who are related by marriage or by reason of lineage. That's one way. Yeah.
My question is, the brother of the sibling or only male?
It can be sister. Yeah. So that means this is just a sample. Yeah. So as long as it's a sibling, it's actually quite close. It can be extended. Let's say, for instance, he's the stepson. He's also PD. Okay, let's look at Najib and Riza. The stepson, he can be PD. Okay, so there must be some form of family relationship. Okay, adopted son. Yeah, how about mistress? Mistress is a little bit difficult because one person may just call mistress, another person may deny. So it's a little bit difficult, but I don't think there's a system, AML system that catches mistress. I don't think so. But immediate blood relationship, that will be. Yeah. So
how about cousins?
Cousins, yes. Cousins, yes. As long as there's blood relationship. One very good example of cousins being involved is, remember at one time there was a clampdown on these Saudi princes? Yeah, so they were actually selling the name of King Salman, and then they were going around and says, look, we have got this much money to invest, things like that. So those are the people who are caught by entities. Right? Okay? So risk-based approach. This is the scheme that Bank Negara wants us to use. And why does Bank Negara use RPA? Bank Negara use RPA for a very simple reason. They know that your resources are not infinite. Okay, your resources must be very focused, and your resources must only go to what you think is high risk. Okay, and how do you determine high risk? There's a certain way of determining risk. So everything, like I say, when we come to risk, it's not an art. It's not whether you, 20 years experience, you just do the way that you feel you're comfortable based on your experience, you know what to do, no such thing. Okay, everything is science. Okay, so there's a method of doing it, there's a very systematic way. So let's look into the way of doing it. Okay, now ISO 9001 is a plan, do, check, act methodology. Okay, so we start with this. Okay, and it provides a process-oriented approach. So the whole methodology goes to the process. I need to know how to document it. I need to know how to review the structure. I need you to actually examine the responsibility on each level of authorization. I need you to identify the procedures required. Okay? So the whole idea is the management of the organization. Okay? This is how. So I look into the leadership, identify and assess the risk. Okay? And if I find that there is anything, there's a risk, how do you create a plan to address this risk? Okay? Now, how do you implement this plan to mitigate this risk? Okay? And how do you tell those people who are involved in operation to mitigate this risk? And then later check your risk management. So every check will involve internal audit. And every internal audit will come back with a report. So those are your review process. Okay? Implement any changes. So after the audit, you have to review it. If there's review, you have to change it accordingly. So this is ISO 9001 2015. Okay, 2015. Yeah. So if you have got to address risk, you got to address it from the management level. Okay. So what are your risk assessment tools? There are several tools out there in the market. Okay. One, we come with risk matrix, okay, failure mode and effects analysis. We got a decision tree, we got a bow-tie model. So every type of tool has got its strengths and weaknesses. Have you heard of SWOT? So, yeah, SWOT analysis. So those is also a tool for risk assessment. So risk assessment is how are we going to identify a risk? Okay, so let's look at the basic risk matrix. Risk matrix, a lot of times the regulators will just call it a risk chart. They say, tell me your risk chart. Okay? Every time we identify a risk, give me a reading. Okay, how do we determine the reading? So whenever they tell you, oh, this is a 2 on the risk chart, what they meant is on the severity and probability. Okay? Severity and probability is 2 and 1. So 2, 1, 2. You just multiply. Okay? The highest risk is very severe. If it happens, the probability of it happening is very high, it's 25. So they ask you, what is the number? So you can say 6. They roughly know, okay, it's caught here. Okay? So there are 3 colors, color coding. It's green, yellow, and red. Red is where you must address it immediately. Okay? If anything falls here, everything comes to a halt when it comes to risk. When everything comes to yellow, whether to move forward, you need your compliance or the board approval. Anything that is green, compliance officer can make the decision. Okay? So every time when we talk about risk approach, we always ask, what's the color? What is the number? Okay? Sometimes this number is replaced with A, B, C, D, E. A, B, C, D, E. So it's A1, A2, A3, A4, A5. Okay, so it goes up. So if you actually have E5, you know it's 25. So this is a risk number. Okay, so every time when someone tells you, oh, risk matrix 25, you know it's the heaviest. Okay, risk matrix 1 here, or A1. Okay, so what's the risk level? Acceptable, but review. See how much you can drop it further. If it's 1, it's almost impossible to drop it further. Okay, but if it's 3, you can drop it further. So tasks should only be executed with appropriate management authorization. Tasks must not proceed. Okay, until adequate action. So everything comes to a standstill here when it's red. Okay, red is always high alert. Okay. Now, what are the what you call that? The two axes. The two axes here is how severe, how probable. Okay? In law we learn, in law of thought, we always learn degree of harm. Okay? And what is degree of harm and likelihood of harm? Okay? How bad it will happen, how severe, how probable is the likelihood of harm. Okay? So when you put these two things together, you get your calculation. Okay? In terms of figures. Okay? Now, monitoring and review. Of course, there's also a bow-tie model. Bow-tie model, you always start with problem, end up with solution. In the middle is how you review the process. Okay? So why do they call it a bow-tie model? Because the whole way of assessing risk looks like a bow-tie. Okay? So monitoring and review. So many tools and platforms are used to automate AML and CFP. The user merely has to key in the key parameters. So every time, most of the time, these AML parameters have already been set by the platform operator. So platform operator will tell you, oh, key parameters, the region of which the transaction originates, okay? The person, the account, okay? What are the type of transaction, whether it's a blockchain transaction, it's a cash transaction, okay? So whether it's trans-border transaction, okay? So screenings will be automated, transactions will be flagged if it exceeds the key parameters. Now, the more parameters that you key in, the more likelihood you'll get a flag. Every time there's a flag, what the platform will do, the platform will inform you. The platform is incapable of stopping any transaction. The platform is only capable of telling you, please, you are alerted, do something. Okay? You can ignore, you can carry it out. Okay? The platform doesn't play the role of the institution that is licensed. Okay? Now, integrated AML intelligence will do the following. So these are all AML intelligence. Why? Because we find that we can no longer do anything manually. So everything will have to be a little bit of intelligence, a little bit of machine learning. Why machine learning? Why? Because we have got to identify certain pattern. Okay? So if you fit within the same pattern of which you have always transacted, there's nothing out of ordinary, I won't be alerted. Okay? Now, so what would this intelligence pick up? It will pick up suspicious activity. This platform is also able to give you regulatory monitoring. Sometimes certain financial institutions, they are required to come up with daily reporting at the end close of the day. So at the close of the day, you've got to prepare a report. So these platforms are able to auto-generate reports for you. So watch list filtering. What are watch lists? Watch lists are people who have been convicted, sanctioned lists. Okay. Watch lists are also the accounts that have been flagged for other crimes, Sometimes it could be civil, sometimes it could be criminal, sometimes it's terrorism financing. So it depends on what is added into the watch list. Why? So all these platforms, they are all linked to some data aggregators. Okay, so these data aggregators, they have attributed the sources. Let's say, for instance, today, we're all very used to blockchain, digital assets. Okay, now, what these data aggregators would be able to do, they would have whatever addresses that they have captured in the system, and they would attribute it to be exchange wallet, individual wallet, corporation wallet, trust wallet. Okay, so different type of wallet. So what you'll be able to do is you'll be able to make all this filtering more possible and more effective. Okay, so customer risk profiling to actually help you, case management. Okay, so if a case has been picked up, they can actually help you escalate the case. So each time you carry out a particular process or particular operation, they can help you manage entity link analysis. Okay, now if an entity has been linked to a few accounts that has been flagged, if an entity has been linked to an ongoing investigation, if an entity has been linked to a criminal prosecution, okay, we all know that this entity is very likely to be blacklisted. Okay, and if you are dealing with an entity that has been blacklisted, you carry with it a certain amount of stigma. Okay, and this actually increases your risk. The more of these accounts that you interact with, the higher your risk, and the more likely you are going to end up with an EML issue. Okay? Okay? Any questions thus far? No questions? No questions, then we move on ahead. Okay? Now, what is the entire compliance system in Malaysia? The entire compliance system is we pick on this view. Okay? So, how we're going to manage the compliance function? The policies, procedures, and control must be there. Okay? Board and senior management, everyone that sits in the board and senior management must be proper. Okay? Very often, the board and senior management, within the board, there will be your fit and proper person. Okay? For in Malaysia, we call it fit and proper. Fit and proper person will be the one that will sign off transaction. Fit and proper person is the one person that will be made liable if anything goes wrong. Okay? Remember when we learn accountability. When we learn accountability, why do you need two persons to sign off a check? Check and balance. One person checking on another person. Okay? Does that also mean that one person can blame another person if anything goes wrong? Right? When I was dealing with a Japanese company and we actually went to court, one of the questions that were posed to this Japanese company is, why do you allow one director to sign off a check? And they say it's because we want that one director to be responsible for everything. The one that signs off is the one that holds the entire blame. Okay? And that's how we operate. We don't need check and balance. A person checking himself is more effective than someone else checking on him. Why? Because two persons could be equally negligent. I expect you to check on me, I expect me to check at the end. We all know. Hey, you check, I sign first, you check, I leave it empty, make sure you check. That always happens. So where's the check and balance? But if I leave it to only one signature, this person is liable. Okay? So the Malaysian system is, why do I pick on a fit and proper person? Because the fit and proper person is the one that's going to be liable. I don't care who carries it out. You're fit and proper, you sign off, you are responsible. Okay? Now, employee screening. If this person has been involved in some cases in the past, civil, criminal, you have got to screen them carefully. Okay? But of course, we always believe that your past doesn't dictate your future, right? But unfortunately, that is only our personal moral obligation. We always have to be very careful. Okay? EML, CFP training. Okay, this is actually to know what's the ongoing trends, what is the best practices to deploy. Independent audit function. This is very important. Internal audit is not considered independent audit. Independent audit is when you actually get a third party to come in and carry out the audit. Okay? Customer due diligence. Customer due diligence is always an ongoing process. Why? Always ask yourself, how recent are the documents in your hand? How recent are these PII in your hands? If this customer onboarding happened 2 years ago, do you still expect that he's still a clerk? Do you still expect that he's still earning 2,000 or 3,000 a year? So his situation, his obligation, and his nature of transaction will have changed. So again, you need to update. Okay? So screening, risk profiling, SDR, okay, SDR, record keeping. Okay, record keeping, you need to maintain up to a certain number of years. Okay, it's always better to keep beyond the recommended years. I sell to gain the difference. I don't sell. If I sell, that means I am just grade 1 money launderer. I want to be grade 5 money launderer. Okay, I don't sell. I take a loan. It's easier to spend loan money than to sell than to take sale money. Take a loan money. Okay? Take a loan money, why? You will not be questioned. Because if I take a loan money and I start to use the loan money, no one's going to question. But if I do a sale, it will attract eyes to check my sale. We don't want eyes to check your sale. But loan, I'm refinancing. Property still mine. I never do any disposal. Okay? So the best way to do money laundering, if you have to do it, or if you're trying to catch someone, is by not introducing cash into a transaction. If you don't, the whole transaction, you don't put cash in, it doesn't attract any attention. So what you do, you deal with money that's already integrated into the system. You're working so hard, placement, to put money into the system. You're working so hard to do integration, to actually put that money in the system. Why don't you money launder with money that's already existing in the system? All you need to do is you just want to be able to have an avenue to spend, right? Spend your own money. Okay? And you can always say, loan money is not my money. Loan money is the bank's money. So it's a very convenient excuse. But anytime you don't pay up the loan, the bank will just take the house. It's equivalent to your money. Almost equivalent. Okay? Now, name the 3 stages of money laundering. Gabriel?
Placement.
Placement?
Integration,
layering, okay?
Integration.
Integration, okay? Then, okay, now, what is layering in the money laundering scheme? Aina?
You layer it with a lot of other transactions so that you distract.
Yes, you confuse the trail, okay? You make the trail very diluted. So, Kevin, what's the main principle behind AMLA?
To give government enforcement agency, law enforcement agency the right to enforce the law.
Okay. How is AMLA made? Yeah.
The answer is to launder money without detection.
Launder money without detection. How is AMLA effective? How is AMLA made effective? Like deterrent. AMLA's main idea is a countermeasure. The countermeasure is done through RIs. So, you see, it's very difficult to put a lot of burden on bank negara or on law enforcement agency. What I do is, I catch all these reporting agent institutions, I give them a duty. Okay? So the main idea behind AMLA is the countermeasure. Okay? So, what's the main principle behind AMLA?
Decentralizing responsibility.
Too much option.
Yeah. So basically, AMLA is I do not have all the resources. So I push out to make other people absorb my resources. And at the same time, AMLA is also to scare you to say I can do a lot of things against you, even if I decide not to prosecute you. I just need to have reasonable grounds. Okay? So now, Jason, what is risk profiling?
Knowledge how risky, probability and riskiness. So the take one is number 9, quantifiers.
Yeah.
Probability and risk profiling is, I don't know.
Risk profiling is the process wherein I give risk rating. Okay, so I give a rating to all the subjects that I'm going to deal with. Okay, so if you have a very high risk rating, I might decide not to deal with you. Okay, so yeah, 25. So what are the two main quantifiers in the risk chart? Yeah, what are the two main quantifiers in the risk chart?
Risk level and probability.
Yeah, severity and probability. That means how bad if it happens and how likely it is to happen. Okay, but if it's the effect is very very bad, but it's very unlikely to happen, it will also be low. Okay, now so when we were learning this in law of thought, we always talk about hitting the baseball ball out from a fence. Okay, how likely the baseball will climb above the fence, and if it does climb above the fence when it hits someone, how bad will the hit be? Okay, so we always take things that precaution, but we're not expected to take unreasonable precaution, but we should take precaution. Okay, why? These are all resource management. If I ask you to take a precaution that ring fence you and there is no risk at all, you might as well don't do business, because business becomes too expensive, operation becomes too expensive. Okay, now. What are the three information retained in the KYC process? What do you think are the three informations that the KYC process will retain? The name? Yeah, what else?
Tax info.
Tax info, yes, yes. What else? Address is very important. Yeah, address, I need to know where you're resided. Okay? Another thing about tax information is I need to know which country you are a tax resident. Okay? Tax resident is actually very important information to be retained. Okay? So now, we do a case study. And our case study talks about this very elusive young man. This elusive young man has dealt with quite a lot of money, and this money has been channeled into a few foundations. And every time we talk about foundation, it seems to be one of the go-to mechanism for money laundering. Why do you think that is so? When it comes to Zaid Hamidi, it was Yayasan Akal Budi. When it comes to Najib, it's Ihsan Perdana. Is it foundation? Where is the foundation? I cannot find. There is a foundation. Okay? So why is foundation a very good go-to for money laundering? For charity, yes. So charity, there is a certain leeway. Okay, so they always want to do charity, and charity always have this idea of doing good. So sometimes people get their eyes.
Duration 4 hours.
Yeah.
Trader's name,
Chung Yee.
NG,
CHUNG YE.
YE.
just use the same format. Anti-money laundering,
Duration of the course 1 day.
4 hours, 2 hours, 2 hours. Actually, it's very bad.
That's what I said.
His name is AML, right?
Anti-money laundering.
You said it, right? I just saw. Provider is
Training provider, money training provider. Hey, no, training provider, not dash.
Dash.
Yeah.
This was the case, the one that the guy that inside.
Yeah, this was why he was found with me.
What do you think about what you mean? Yeah, it sounds like prison.
Yes.
Pork meat soup.
What is pork?
Who does the training arrangement for Pacific?
In general, should be our team. Yours is more for the time.
Whereas Alicia is doing transfer pricing.
Oh,
So we don't know. Because I think we have a lot of related companies in the sector.
I think I can get maybe the accounting team and also the.
I think you might come.
Let me see, what did I most of the comments?
We're doing mostly transfer pricing as if the related party, related company.
Okay. Okay. So not me.
is been recorded.
Oh, it's been recorded.
Yeah.
How long is it?
Then I can do the product.
Yeah.
Okay, so when we look into this particular case for Najib, why do you think in one NDB is able to squirm his way and in SRC is quite unable to squirm his way through? When you look into all this, do you see where Jolo is? No. Okay. So he didn't get the help of the Chinaman to run his money. Okay. So money laundering wasn't very effective. So money laundering was a little bit more effective in the one entity. So here he thought, 42 million, no problem. Let me do it myself. Okay. And he do it in the most unsophisticated way. Probably because he thought he's a premier. He went all into the bank account and his personal bank account. And when you are the person who has the power to instruct and it lands in your personal account, there's actually very little for you to say, I'm not involved. Okay? So very, very important is, the judge, Naslan, he ended up with 2 million in his account. And he says, I don't know where this money comes from. And a report was lodged against the judge. This is what happens when your account is being public. This is what happens when you give a person your account number. Right? So that is why doing now is so important. Doing now is to prevent people from doing your account number. Okay? And so here, what are the controls, the red flag, the risk profiling? Okay, suspicious activity transaction report. Everything could have prevented this from happening. Okay. Is there any questions that I can take from the crowd? How to effectively money launder? But I think that is quite important. Right.
Yeah, one.
Yes.
About the freezing order, right?
Yes.
It's not just limited to just bank referral that actually has the power to do it, because bank referral is just one of the many enforcement agencies.
Yeah. You have got 9 law enforcement agencies that can do a freezing order. The main one that always does it is MECC.
IRB also does that a lot.
Yeah. LHDN, MECC, the police, SC, you have your customs. Any one of the 9 enforcement agencies they can do it now. Okay, so there are many people who can actually put their hands in and disturb your livelihood. Okay, so if your account is implicated or your asset is implicated in one way or another, it doesn't have to be the main source. It can be part of it. It can be an instrumentality of the offense, number 1. Number 2, it can be a predicate offense. Predicate offense means it might not be a money laundering offense, but it's actually linked to a money laundering offense. Let's say I stole something and I passed to Kevin. Kevin was holding the stolen item. He doesn't know he's holding the stolen item, okay? But he's holding a stolen item, handling of stolen items. A bit of something like that, okay? But on a more serious note, on a more serious scale, okay? Any further questions?
Would you regard the AML ATF to be more lax in Labuan?
Sorry?
With regards to Labuan side, would it be more lax or more stringent?
More lax or more stringent, they have different policies, they have different ways of looking at things. So whatever they decide there, they are like a self-contained LFSA, self-contained regulator, but they are also one of the reporting institutions under the AMLA. So because they have a different way of looking at things, one of our recent interaction with them is they consider whatever a token that is linked to the asset, the token will take the characteristic of the asset. Okay, so if the asset is a commodity, the token will take the characteristic of the commodity. So it won't be covered by security law. So that's the position they take. Okay, but for other jurisdictions, other regulators, they may take a different view. So it's not so much about whether they are into money laundering, but the point of view, the legal position they take might be different. Right? And they deal more with offshore accounts, so you can actually manage a few foreign currencies at the same time. Okay? Any other questions? Shing, would you like to ask any question?
No, so far I'm very happy and satisfied with the presentation.
I see. So you're happily taking notes. Yeah. Okay, so with that done, I would like to do a recap of whatever I've gone through. So if you remember the course objective, the course objective is for us to understand what is the framework, basic framework of AMLA. What are the measures that we can take to mitigate money laundering actions? We also talked about some risk parameters. We also talked about how we do risk profiling and what are the approach taken by regulators in dealing with this AMLA framework. Okay, so I hope that after this training, we're able to first understand what are the steps that we need to take. Okay, what are the countermeasures? Okay, and what are the flags that we need to look out for? Okay, and also more and beyond that is before something even happened, how do we take preventive measures? So we learned from the training that preventive measures is through identifying a risk profile, and we deal with that risk profile with extra vigilance. So that's how we can actually control, and we can actually also ensure that there's a proper use of the resources that we have. Okay, so with that, I thank you very much. Thank you for being in this session, and have a good weekend, everyone. Thank you.